Hi, welcome to the Market Alert for the 5th of May 2016. There seems to be a pattern unfolding here, and this is Tuesday's price chart actually, not Wednesday's. And this is the pre-market session. You can see prices fell down over 100 points there. Then we had the session where it was choppy, and then the overnight of Tuesday and then Wednesday we have the same pattern there as well, where prices dropped 100 points in the pre-market session. And notice how steady the decline in prices have been for both Tuesday and Wednesday. It's only when the markets open that the volatility increases, and then we end up with this sideways choppy activity. And yesterday we had the buy signal just prior to the ISM manufacturing figures, which came out better than forecast, and this was a profitable trade. Then the crude oil figures came out, which I didn't actually look at yesterday. I'm assuming that they were actually higher than forecast. Let's just have a quick look and see what they actually were. Yeah, we had 2.8 million surplus, and the forecast was just for 600,000 barrels there. So the figure came out, the market then moved lower. It's market then finding support at the 17,650 level before then just trading sideways, and then eventually we see the market break this in the early part of the session, then try to move back in the latter part before trading sideways. And then we see the markets being up on the overnight, but will we get another 100 points to the downside today? Germany and I think Italy is closed today for a bank holiday, so also keep in mind as well that we're heading for the Friday non-farm payroll figures, which will be released tomorrow as well. So the market could be fairly quiet today, thinking about it. We can see the market certainly changing trend here. The uptrend has been broken, but we're not getting any big sell-off bars. We want to see some big down days to really get this volatility to the downside going, and momentum to the downside as well. Again, just to point out and just to keep reminding you that the increase in volume only appears on down days. There is a massive downside pressure in this market, and how it is being held up nobody knows at the moment. All of the traders that I know for many years were all sort of wondering how on earth they are managing to keep this Ponzi scheme levitated, but they are, and there's nothing we can do about it. We can only trade what we're actually given, but at the moment they're managing to do this. But as I said before, it won't be long before the training wheels come off, as it were, from the QE, unless of course we are going for more QE, which I read an article about, that the market could actually be pricing this back in at the moment, just to try and boost it. But it won't last for long. As I said before, it's like a drug addict or an alcoholic. The first bottle or the first shot of heroin is great, you get tremendous effects, but the more you do it, the more you need, and that's exactly the same with QE. So even if we do get QE4 unleashed into the market to try and support things and drop the long-term yield rates and support the US dollar, then it's not going to last for long, because it's been there, done that, and it didn't work before. So it will work initially, but in the medium to long term the market will just reverse from it. News-wise today, it's the French and German holiday. It's they're not the Italians, not that would have much impact, but the German ones for the European markets will make things a bit quieter. Bullard's being wheeled out at 4:30 p.m. to speak, so that's during the quieter time. So Bullard tends to have a positive effect on the market, i.e. his rhetoric is believed, and the market will be pumped to the upside. Carney has a negative impact for some unknown reason, and I suspect that's due to the fact that nobody actually believes a word he's got has to say, and the lack of credibility with all of his forward thinking, planning, and all the rest of these schemes that he came up with that never came to fruition. Anything that he's ever said has never happened, so that's probably why. Whereas Bullard seems to be able to convince, along with the rest of the Fed cohorts, the rhetoric that things are fine, and the economy is fine, and the labour market is strong, etc., etc. So I would expect the market to get a bit of a lift from 4:30 based upon wheeling Bullard out. On the implied volatility, we've got a slight increase to 1364. We could do with a bit of a pullback on this, so an update would be useful. and then a nice big down day would be good. We don't want to get to the 20% figure or 22, 23% too quickly in a sliding sideways slow grind to the downside. We want the implied volatility to double on some big down days. Right, that's it for today. I will see you in tomorrow's edition. As ever, thanks for watching. See you in the next one.